When there is a bit of nervousness in terms of the market, we are seen as a harbour of safety.
Julia Lee, welcome to the business.
Great to be here, Alicia.
So we're at the end of the month and the market looks like it's had a positive finish in July.
July can be quite volatile for investors, and that's because it's known as confession season. This is where companies that are going to miss earnings in a positive or negative way by 5% during the August reporting season usually confess to the market. The good news is that it's been a positive month, so we've gained 2.6%. Looking across the market, you know, the financials are such a big part of the Aussie share market, about a quarter of our market. The good news is that we've seen a gain of 6.6% there, despite some concerns about rising interest rates, as well as those tax changes in the residential property sector. But small companies have been under pressure. We've seen the small ordinaries down by 3%, mainly because tech stocks have been under pressure, and the tech sector is down 3% for the month. But the best performing sector has been energy. We've seen renewed tension in the Middle East, and the energy sector up a huge 12.6%.
Obviously those big energy producers and refiners benefiting from the higher oil price, but more broadly, why is the gains in the energy sector important for investors?
It is a concern for investors because if we think about energy costs, they're in everything from transportation to food, and they really act like a handbrake on the economy and growth. So higher oil prices, we keep an eye on it in case it starts to cripple growth. So in the coming months ahead, we're going to keep on watching those oil prices, especially given some of those strategic reserves from the US and China have been whittled down over the last few months, and at some point they'll need to be rebuilt.
Well, the Middle East war is obviously a theme that's going to keep investors alert, but another one is the tech sector, and there were fears that AI spending was too high, but Microsoft put that to bed this week. It surged.
Microsoft had an absolutely historic session. For the first time in market history, we saw a company gaining just under $500 billion. The stock gained 15% in one session. Now, it was on the back of cloud adoption. It's at the fastest pace that we've seen for Microsoft since 2022. But it wasn't just Microsoft. We saw Amazon up by 8% after hours on a better than expected earnings report. But on the flip side, Meta was down by 8%. I think it really demonstrates when investors do get nervous about valuations and growth, those earnings reports are absolutely crucial to underpinning that rise in the share price.
And we saw that optimism around the tech sector flow through to Asian markets, particularly Korea, which has been very volatile of late.
I think Korea has brought in some measures to try and curb some of the leverage that we are seeing in the market because of the volatility that we are seeing, especially in the retail space. But SK Hynix and Samsung, I guess, are a case in point, where we have seen the shares dropping by around about 30% in a matter of weeks, only to see a big jump back again. So end of the month, and the Kospi, once again, one of the best performing stock exchanges in the region, and that's really on the back of Samsung and SK Hynix.
How is the Australian share market perceived internationally, given our lack of a huge tech sector?
I mean, if you have a look at asset allocation on a global basis, you could say that the US is high growth and the Australian market is more income, high dividend and defensive. So when you see a bit of nervousness in terms of the market, usually investors tend towards some of those defensive areas to gain protection. So the Australian market tends to benefit on a relative basis when there is a bit of nervousness in the market. But of course, coming into the end of the month, we've seen the growth sector tech stocks once again surging. So it looks like the US may outperform if that continues.
And I mean, as we see this nervousness around the tech sector ebb and sort of flow in the US and even in Asia, what would attract investors here instead?
That's a great question, because as an investor, you've got the whole world open to you. So when you have a look at allocating through countries, you can probably see the US in the eyes of high growth with a very big tech sector and a strong earnings outlook. Now, Australia, we're not expected to grow as strongly as the US, and our makeup is completely different. We're financial and mining stocks predominantly. But on the flip side, we don't move as much as the US, and we have very defensive characteristics. And that means when there is a bit of nervousness in terms of the market, we are seen as a harbour of safety. So if you do see a bit of volatility, some nervousness creeping in, that's likely to help the Australian market on a relative basis. But also if you see our currency rising, that also makes Australia an attractive destination for investment.
We have a relatively small tech sector in Australia, but what dominates our market, as you mentioned, is the banking sector. And NAB this week has said that it's seen a slump in mortgage applications.
This is absolutely fascinating. We are going into reporting season and the banks are a huge part of the market. Having said that, for the August reporting season, it's only Commonwealth Bank that will report full year results. We'll get quarterly reports out from ANZ, NAB and Westpac. This week we got a bit of a taste from the private bank and the business divisions of NAB, and as you mentioned, mortgage applications over the last 3 months have slumped around about 15% for NAB. Now we know that interest rates have been rising and that's been an impact in the property sector and in the residential property space. Those tax changes as well also impacting. But it's been fascinating because on the economic front we've seen residential approvals, building approvals, jump by 7.2% in June month on month. And the banking space, well, for the month, it hasn't been that bad at all. NAB shareholders have seen a jump of 10% in terms of the share price in July, and the financial sector up by 6.6%.
And interest rates are kind of crucial for the financial sector. If we start in the US, Kevin Warsh, the new chairman of the US Federal Reserve, has this week not delivered a rates outlook and kept rates on hold, and investors are a bit confused.
Look, when you get a new boss, you watch for signs about what that boss is like, and that was certainly the case with markets and Walsh, where we were looking for clues on how he would tackle interest rates going forward, but we didn't get much at all. Interest rates stayed on hold in the US, and he didn't give much away in terms of the press conference, which was very closely watched as well. He just reiterated that the Federal Reserve in the US is committed to price stability. So US, very different path from Australia, where we haven't seen rates rise at all and just on hold.
In Australia though, a bit more communication with a bit more of a warning around inflation. What do you think mortgage borrowers can expect from the RBA in just over a week's time?
Well, good news if you have a mortgage, at least this week, where we have seen inflation coming in below expectations. And that's important because inflation feeds into interest rate expectations. We've seen some interest rate hikes now, so you would have seen your mortgage rates go up. But the good news is that the markets stopped pricing in rate hikes for this year at least. If we have a look at what the markets have been pricing in, it's really changed because of that inflation number that came out. But if you're hoping for a cut, don't hope for a cut too soon because it's just on hold for the foreseeable future.
And Julia, reporting season kicks off next week here in Australia. What can investors expect?
Look, I think it's going to be a good one, and that's because historically the Australian share market has only expected earnings growth about 4.5%. But this financial year, expectations are for growth of 12%, which is huge. Now, most of our market is the financial sector and the mining space. And if we look at the historical performance over the last 12 months, it's been quite strong in these sectors. So expecting that to really drive earnings this reporting season. But we know that share prices isn't about the past, they're about the future. So really it's going to be those forecasts and outlook statements which are going to drive share prices.
Julia Lee, thank you so much.
Thanks, Alicia.
And that's all from the business this Friday. If you like that conversation, you can see more of our in-depth interviews on our YouTube channel or on ABC iView. I'm Alicia Barry. Thanks for your company.